You still you still got that mama mentality to where like you just a dog. You feel me? Get the back testing, my nigga. So now you should have the confidence. Like all I gotta do is make sure my plan. I just focus on my plan and let my plan perform. You feel me? Let the process perform. Yo, what's good? It's your bro Lo, and I'm bringing you guys another saucy trading video. You know what I'm saying? Be reacted to Mr. JadeCap, you know what I'm saying, revealing the ICT Asian range strategy that made that nigga 10K. You know what I'm saying?
Alright guys, what's going on? Today I'm going to talk about one of my favorite concepts that I use when it comes to my trading strategy. And that is going to be the Asian range. Now, the Asian range is from 8 p.m. Eastern to midnight. Okay, so this is the range that I'm typically looking at. I know some people out there might use 7 p.m. to midnight or 6 p.m. to midnight, but I've always used 8 p.m. to midnight. Now, this 4-hour window, basically what it tells us is that trading is typically held in a consolidation, and above the Asian range, right, we have stops, buy stops, and below the Asian range, we have sell stops. So it's creating a range for us in a consolidation typically where, you know, liquidity is being built up on both sides of that range. Now,
I love using the Asian range for like a buy side liquidity run before an inversion FEG or breaker or whatever confluence in the direction of my trade. I love it.
I like using this concept because it doesn't change. The time element doesn't change, and the fact that we have lows and highs printed during this specific window does not change. So every single day we have levels of liquidity.
So you notice how he said it doesn't change. That's why he likes it, because it's a certain time that it happens. So it's like it's easier to build a very simple, consistent process over the Asian range. You know what I'm saying? Just implementing the Asian range and that's it. You could create a simple ass trading strategy off of that. A simple process to follow. Not simple trading strategy, but a simple process that you could follow. Okay, Asian range, whatever my direction is, buy side or sell side liquidity run to form, give me a good entry. You know what I'm saying? And then after displacement, I could get a good entry off of that. You know what I'm saying? After that displacement. You know, I really fuck with the Asian. You know what I'm saying? It's a simple process to where like it's a consolidation. You wait whatever your direction is, your daily bias, your wherever you think the draw on liquidity is. Boom, just straight run on liquidity, run on that Asia. Let's say if I'm buying, I'm waiting for it to run below Asia low, and then give me a displacement, and then boom, inversion fair value gap, an entry. Simple process in the direction of whatever you're looking for, and you just stick to that and just stick to the probabilities of that. It's a simple process to follow.
That are very straightforward and easy to understand, because we know during that Asian range, we are going to have a specific high or a specific low that's printed that creates liquidity. And then at midnight Eastern, you know, during London session or New York session, we might take out one side of the range, trade higher, or we might take out the high and trade lower.
Yep.
And when it comes to understanding this specific Asian range, if you guys aren't, you know, if you're not brushed up on statistics and probabilities, I'm going to bring up one image that maybe you guys all remember, maybe you don't, but this is extremely important when it comes to trying to visualize the Asian range. Now, what is this? This is called the normal distribution bell curve. So typically on a normal day, you know, price stays within 2 standard deviations. Okay, so that makes up 95, as you guys can see, that makes up almost 95% of a normal distribution on a specific day. Right? When we have a consolidated day, you know, it's almost making up 70% of that. And when we get past 2 or 3 standard deviations, now we're in outlier territory.
So now it's a percent. So it's a percentage of the time that it stays above or below the 2 standard deviations. So that shit tells you a lot on how you could build an even more high probable trading strategy, or a much more high probable process, to where like you just wait on, like, once it hit two, let's say it goes above Asian range, you put your stop above 2 standard deviations, and you just take that as in the direction of whatever your bias is or whatever your drawn liquidity is, and the price action is lining up. That's why when I took that ES trade on my last video, right? When I took that trade, I had all the price action was there and the time was there for me to just go ahead and take it. As long as I'm getting above that midnight open price of Asia, as long as I'm above there and I'm selling above there, I got an efficient price. I just sold close to that area and made sure my stop was in a good range, you know what I'm saying, of whatever price action was there. But say like it went above 2 standard deviations in Asia, I could sell above Asia high and like just keep my stops above 2 standard deviations if it's more probable that happens. You know what I'm saying? Hey,
and why this is so important to my trading,
I already know where JadeCap going.
Each asset that you're trading, right, has a specific daily range limit that they will typically trade before there's some type of mean reversion. Okay, so a lot of my trading is mean reversion. And what I'm looking at as far as markets go is I'm looking for those markets to hit intraday extremes. And if it lines up with my bias, I'm typically trying to go the other direction. Okay, so let's just say, for example, that this normal distribution bell curve is bearish to the left, right? So we have negative standard deviations to the left, and then we have positive standard deviations to the right. Well, actually, this is going to be flipped like this. So bullish is going to be here, and bearish is going to be on the right. And I want you guys to be able to visualize this because this aspect probably has changed my trading the most when it comes to understanding when these intraday highs and lows are being printed. Because it's starting from a range. So the range is starting during Asian session, okay, and that's the normal distribution cycle. But if we trade lower, let's say we trade 1 or 2 standard deviations lower, now all of a sudden, if that aligns with my bullish thesis, we are starting to approach the extremes of how far the market can trade lower before it expands higher.
Yep.
Okay. So I'm gonna, take this image, and I'm just gonna help you guys visualize what I look for.
He gonna break it down
as the Asian range. So let's just
about
say,
to break
for
this shit
example,
down.
this here is our Asian.
I already know where he about to go with this, but he about to break it down.
Range, and we can plot this out. All right. So you have the low down here, and I always mark it out as AR low. Okay, and then we have our AR high up here.
So he's gonna draw say if he's bullish, it's 2 standard deviations down here, probably a PD array. If it's getting down into there, that means you're in this territory of high probability that you're getting in at a really good efficient price. This, you know what I'm saying? Buy here, stops below somewhere. You know what I mean? Like.
So
W video
trade above or below
already
the Asian range high or the Asian range low, this is what I'm going to look for. So I'm just going to rotate this so you guys have an understanding of what I'm talking about. Now, if the market trades lower to -2 or -3 standard deviations, okay, we're taking out liquidity, and we're also trading to a point where intraday it might hit an extreme point. And this is on a classic buy day or on a classic sell day. This is exactly what I'm looking for. So,
bro, W video, what can I tell you? This is the W video already. Like, bro,
on a classic
what?
buy day, I want to be able to see this market trade lower and hit one of these standard deviations as an extreme, because that's typically where I'm going to see, a market structure shift or a fair value gap. Maybe we're gonna get a
So this could be like London low or some shit, or old Asia low that got left, or previous daily low. This could be like a previous daily low, something, bruh. Right
placement. Maybe we're getting turtle soup, right? Taking out a previous day's low.
What can I tell you?
All of those different concepts, when they align with this standard deviation, that's when we're going to see powerful moves where we're going to be able to position ourselves below, right, the midnight open. So maybe our midnight open is here. We can position ourselves below the opening price, and that daily candle will expand higher and it will close higher on the day. Okay, so I want you guys to, kind of pause this video.
What can I tell you? I already know. I already knew exactly where this was going, bro. Listen, this is a very simple. Look, people can create. It's crazy because people make trading so hard, bro. But you could literally create a high probable strategy off of something as simple as this. Just buying under Asia low, right? Somewhere, some PDA rate under that. If you're bullish, if you have a daily draw on liquidity, a higher time frame draw on liquidity, all you have to do is you can mechanically just get in at some type of liquidity pool, some previous daily lows, something here, and then start putting your stops under certain PDA rates and just risk less and then look for higher prices. That risk to reward is insane. You know what I'm saying? If you're buying right here when this daily candle is supposed to be bullish and you're buying somewhere below in the wick of that daily candle, the risk to reward is insane. So you can get in down here and keep your stops down below 2 standard, 3 standard deviations below there somewhere, right? Because it's more probable to go up from there and just, you know what I'm saying?
Really
Like
study this in depth. This is going to be a very quick video, but it's a very powerful concept. This is one of the concepts that I rely on almost every single day. And what I'm going to show you guys is oftentimes is that you don't necessarily need to spot trading setups. So you don't necessarily need to have a fair value gap. You don't necessarily need to wait for a market structure shift. When you have a very strong opinion of where the market is going to go, oftentimes I use these standard deviation levels as my entry prices, but I also use them as my stop losses.
What can I tell you?
Take profits.
What can I tell you?
Maybe I'm going to position myself at standard deviation 1, and I'll just put a 1 here so you guys can visually see it. And maybe my stop loss is going to be at 2. Okay, and maybe I'm going to target 1, or I'm going to target 2. Okay? So, again, pause the video, take some time to really understand this, because, you know, when I was going through statistics in high school and in college, I really didn't pay attention to this. I understood it. It made sense to me. But in the markets, it makes a lot of sense. You know, because when I was in class, I was like, when am I ever going to use this? But it's very basic. All right, we have the mode or median, and then we have the outliers. So when things get too far out of reach, like intraday, typically markets will snap back because from an intraday basis, there's only so far the markets will go. Now, let's get into some of the examples, and I'll show you guys on a couple different asset classes.
This is a real gem, bro. JadeCap, this is a real gem you just put out, bro. Dead ass, bro. This is a real gem. I can't lie to you, because it makes me look back at all my most successful trades. It's literally at midnight open price or below the Asian range, like when Asia sell side liquidity is taken out in my bullish direction. You feel me? And then I'll wait for a CSD, inversion, FEG, all of that. You know what I mean? But like this right here is a really good gem. Like if people just like really like think about this, like watch this video and pause it and like really think about, go back through your chart. But look at these examples he's about to give us, bro.
Here we have all of our Asian range deviations plotted out. Now, if we're bearish, typically all I'm looking for from a liquidity rate standpoint is I want to just see the Asian range high be taken out. It doesn't matter what time it is. That I don't really care about that, okay? What I care about is, do I have a bearish bias coming into the day, and do we take out the Asian range high? Because typically when we don't take out the Asian range high, I typically don't do anything. So here, you guys can see that we didn't take out the Asian range high, but we still got a massive run lower. Now, that doesn't necessarily mean that you don't need to, you're not going to take a trade. Maybe there's other reasons for you to take a trade.
You stick to the process, bruh. You stick to the process. That's why he don't take that trade right there if it's not running out Asia high. You feel me? You stick to the probabilities of this happening. What's the probabilities of this function? You feel me?
But oftentimes, if we're not trading below the Asian range, to me, it very much reduces the probabilities that my trades are going to pan out. Because usually what I like to see is, when I'm bearish, I like to see the market not take out the Asian range low, trade higher, and then I can position myself above the open and then target the Asian range low. And there's a couple of examples that I can kind of walk you guys through. But just as, you know, a quick example here, let's say you were just to sell, put a sell limit at the Asian range high, and then you used one standard deviation as your stop loss. Well, maybe you want to target, you know, one of the standard deviations down here. So you can use that same intraday level to set your targets. It's not going to get hit until the following day. But that's pretty much what I'm looking for. So I'm looking from an intraday basis. I'm using these outer boundaries, right? Just kind of take that distribution bell curve and just plot it or visualize it as if it's on the chart.
Yeah.
So when it gets to those extreme levels, I'm looking to go the opposite direction. The following day, what do we get again? We get a run on the Asian range high. You could have just shorted the Asian range.
Now, say if you're just bullish that day, you're not even waiting on the CSD and shit or whatever. That's why even though his win rate was like a 30, he still pulled out 2 mil because the risk to reward is crazy. You know what I'm saying?
Range high, put your stop loss again at 1 or 2 standard deviations.
1 or 2 steep. Yep.
Okay, and maybe you're going to target 3 or 4. Very, very simple. And oftentimes these standard deviations do hold up as far as stop loss placements. So let's say, we're approaching a high time frame PD array, and we have the previous day's low here, right? We've taken out the Asian range low, and we get a nice closure here. Well, you can still use the Asian range deviation as a level where you can possibly place your stop loss. Because let's say if it traded down to this level and it bounced, right, you got a nice closure here, and you're not expecting it to go back down below and retest.
So say like you waited for that inversion fair value gap, CSD. You know what I'm saying? You can enter there and then keep your stop at 1 standard deviation because it's right below this down close candle. This is where something where you could be a buyer at. You know what I mean? Like type shit.
The 1 standard deviation. And then maybe you want to target like 2 standard deviations. You guys can see here that it panned out very nicely. Even if you targeted 3 standard.
Even though it didn't hit it probably didn't hit it at that point. At this point. Like to the T, you probably just be like, fuck it, I'm taking my money. You don't have to completely wait until it just hits your TP. If it gets like right there, just take it. Learn to take it. You know what I'm saying?
Deviations left the trade alone, it would do the same thing. And let's say the next day, we are looking for more longs, right? We're waiting for a sweep on the Asian range lows. Maybe you want to enter on a limit right at the Asian range lows. Put your stop loss at 1 standard deviation.
Or 2.
Maybe give yourself a little bit more room. And target 2 standard deviations, right? You guys can see here that these deviation levels work very nicely. Now here was an outlier. This is the day that Trump spoke.
Yeah,
you guys can
outlier.
see.
Okay.
I believe this is the day that Trump spoke during tariffs. All right, you guys can see here that we had a massively outsized move. So early in the morning, there was an opportunity to go long at 2 standard deviations, but then in the afternoon, it traded up to almost 4 standard deviations.
Yeah.
Right? And you guys can see how they are limiting price on how far this market is actually going to move. All right, and this is pretty much how I anticipate where I can possibly expect reversals. I can use them as stop loss placement. So here we have previous day's high.
This is some real sauce, bruh. This is some real sauce. Just like really think. It's like because I know about this right here, and I use deviations, but now he just really like broke it down to where like it's reminding me like, yo, that's actually like valid as fuck, and that I could import this into a simple process and wait for these. It could play out to where it could increase my probabilities because I could just be like, fuck it. I'm not gonna be a seller until I see some type of buy side liquidity lined up with that 2 standard deviation or 1 standard deviation after Asia gets knocked out, wherever that buy side liquidity is. You feel me? And then enter one little lot there, right? Let's say hypothetically, right? This is Asia. Right, and we're looking to be sellers, right? I could wait for that to happen, and I'm bearish on the day. Let's say I'm bearish on the day. Okay, boom. SMT probably happened here, right? But it ran up to some type of previous PD array, like some type of PD array and buy side liquidity. Okay, this was a big wick, so all of this really doesn't matter because this probably came from some type of bullshit ass news. So you're looking at this buy side liquidity right here with that PD right here, and you're bearish for the day. Here go Asian range. You always sell above midnight open price. Always sell above. So even if you was to get in here and put your stop above 2 standard deviations and target it lower, cool. So you could just enter there, right? Enter there at some type of PD array above midnight open price at 1 standard deviation type shit. And I could be like, okay, I'm going to put my stops just a little bit above 2 because it's not going to really go there. It's not more probable to go there. And then boom, once he starts breaking down, giving you up close candles or whatever. See, inversion fair. That's when you could like scale in and shit. And then I could put my stop like above here. Yeah, keep it like a simple process on scalings too. Yo, that shit fire.
And there was actually SMT at the high. So NQ did not take out its previous day's high, but if you guys want to check Tuesday, the April 8th, you know, go feel free to go study those markets.
Yo, if this nigga bring up ES, bro, I'm right there, bro. It's like I just broke it down before he even said it.
YM, so Dow, and ES, which is the S&P, they both took out the previous day's high.
He's bringing up the S&P.
When I saw this trading at 2 standard deviations, you could pretty
Come on, man. Hey, man. That's what happens when you really like been doing this and like you really think, bro. You know what I'm saying? So that means when I go back into my trading, that's why it's good sometimes to watch certain videos like this, right? And if it aligns with your trading, if it aligns with it, if it's something that you can add to your process to increase the probabilities of your trade, bruh, do that. Don't ever reject information like that. You know what I'm saying? Don't ever reject, because you can improve your process, your trading plan. You can improve it. So I know going into next week, to even increase my probabilities, I will never sell, right? Sell above midnight open price. Because midnight open price is after Asia ends. So I'm not selling anywhere when it's below that. If I'm bearish, and if I'm bullish on the opposite side, if I'm bullish, I'm not selling until price is running out. Midnight open price, the midnight open price. If this didn't get ran out, Asia didn't get ran out yet, and then at least come down into some type of PD rate. And I know I got 1 standard deviation here, 2 standard deviations here. So if it does come into some type of PD rate, I can enter my trade there if it's super high probable, right, for it to be bullish that day, and the draw is very, very clear. You know what I'm saying? And there might be some SMT with whatever's going on or getting created. I don't know. Boom, enter there. You do some scale-ins around midnight open price and all of that, and it'll be a classic buy day, bro. Like,
blindly short this level and put your stop loss at 3 standard deviations, right? And maybe you're going to target the Asian range lows.
But he's just keeping it simple. Say if you enter there, boom, CSD. After the CSD happen, it doesn't have to close below there. But you could probably get something happening inside of here. Right? To go to like 2 standard deviations. Or even 3. You know?
Okay, that's a 2.76 to 1 reward to risk. All right, just using deviation levels, just based on price, because a lot of times when I'm trading, I don't really care what the candle looks like. I care what the price is on the right-hand side of my screen. That's all I care about. Am I getting a good fill that makes sense, you know, based on an intraday time frame? Okay, so intraday, you know, there's a lot to study here. Sometimes, and this is another nuance that maybe you guys will also pick up, and I'm just going to note it. When we have a trending Asian range, those are days where I typically don't expect highs and lows to be ran out. And in fact, I look at 50% of the Asian range to be respected. So when we have a trending Asian range like this, typically I'm expecting 50% of that Asian range to be respected. Same thing here. We have pretty much a trending Asian range here.
Okay.
Right? And 50% of that range is being respected. Okay. When we have very tight consolidated Asian ranges, that's when I'm looking to see if these deviation levels are being respected. Here, there's a nice tight Asian range. We ran out the previous day's high. Right? I could short it here. Let's say I just short it as it's trading up into 1 standard deviation.
Okay.
Let's say I just want to...
Hey, y'all gotta take notes right there. I ain't gonna lie. Y'all gotta take notes. Hey, I'm gonna take some notes too. Right after this reaction video. Just off of this. You know what I'm saying? What he just said right there. When that shit trending, ICT has said it before, bro. Like, shit just be going through one ear and out the other, bro. I swear to God. Because you know what I'm saying? Look, Asian range, you know what I'm saying? If it's too trendy, if it's too big of a trend day, shit, it might not respect the standard deviations type shit. It might be a ass London session or ass New York session or some shit. I don't know. But yeah, I know you said something like that. But no, that's cool, JadeCap, that you gave that right there. That's a real gem right there.
So short it at 1 standard deviation, put my stop loss at 2 standard deviations, and maybe put my take profit at 1 or 2 standard deviations. right? Take some time to get there, but it does eventually get
But
there.
even if you took it right there, because it
Maybe
got
if
close.
you're just trading intraday, you're just aiming for 1 standard deviation, or you're going to exit based on time. This is still a 2.5 to 1 if you're just blindly shorting the Asian range deviation. Now, the bias needs to line up, okay? But it's very, very important that you guys pay attention to these levels because they do respect them on an intraday basis. I basically use them like pivot points. So if you're wondering how to add these deviation levels to your chart, there's a really great indicator.
Yeah.
It's called ICT Everything by Cold Brew Rush.
Yep,
And
that's exactly. That's the same one I got.
Here, all right, make sure that you have.
That's the same one I got, bruh. Yep, but that's a good one. Yo, this is a W video, bruh. W video, JadeCap. I ain't gonna lie. All right, before we end this video, shout out to Show. You feel me? He got funded with a 50K by Tradeovate, past the account. Yo, with Apex, this shit is not easy. I'm telling you, this shit is not easy. You know what I'm saying? With Apex, so you know the fact that he got that's good. You know, first step completed. I just wanted to tell him, like, you know, lock into that payout. You know what I'm saying? Discipline, focus, because you know he's been with me, a part of my journey. You know what I'm saying? He's been with me, and you feel me? We talk. This is the homie. You know what I'm saying? So we talk, and you know what I'm saying? And I helped him a lot with, you know what I'm saying, what the shit that he should do. You know what I'm saying? Which is collect data. You know what I'm saying? Back test. Build confidence in your strategy, your process. You know what I'm saying? And then you got the statistics right there. You got the data right there. So it ain't about just believing in your strategy. You want to know your strategy. You want to know it type shit. You know what I'm saying? So that way when you're performing, you know what I'm saying, you could take the ego out and focus on the rules, your process. You know what I'm saying? What it is that gives you this data right here. And then when you're doing something that's wrong, if it's psychology, you just have to go back to this was my plan. You feel me? And as long as I stick to that, win or lose, and deal with those probabilities, you're straight. You know what I'm saying? So that's good that he collected. Look, he said I'm super confident, especially with my data. When I told him to lock in, don't tilt, follow your rules, low risk. Told him to lower his risk. You know what I'm saying? So hey, he gonna lock in. I know he gonna lock in as long as he do that, bruh. You know what I mean? And I just wanna just show you guys, like, boom, this is just somebody that, you know what I'm saying? You lock in, you start taking this shit serious. You know what I'm saying? You start taking this shit serious. You lock in, collect data. You know what I'm saying? Type shit. You got that account. Now it's just time to just follow your rules, bro. And hey, that's why I be having to tell myself too, bro. You know what I'm saying? Even when I went on that little losing streak, you know what I'm saying? Self-doubt, all of that. Nigga, like what? I got a payout with straight discipline. You feel me? With straight discipline. So you know what I mean? Even though I have my little down days and shit, whatever, it was just part of the game. You know what I'm saying? It's just what it was. Yeah, I overtraded during that 1 week to get my payout for 500, right? Overtraded a bit. You know what I'm saying? And that kind of taught me a lesson there, right there. How I felt that week. Like, it didn't feel good. My performance was low as fuck. You know what I'm saying? So like now I'm locking back in with myself. Like, even from this week, like, look, 1 trade a day. It was just straight 1 trade a day. I didn't take 2 trades a day. That Monday, look, let me show y'all. Bro, what I'm talking about. Because, like, I really, this is what it is, bro. This is what it take, bro. Like, you know what I'm saying? Like, let me show you. Like, this is what it take, bro. You gotta lock back in 1 trade a day. I was like, fuck that 2 trade a day shit. This was right after I got it. Look, after that week that I got that payout right here. Like, I was over trading like crazy, even though I won more than I lost, or is about the same, and you know I'm aiming for more, but just the stress on my mental capital, and it was draining that week because I really wanted that payout, and I let too much ego be in the way, and I could have tilted, I could have went on tilt. But I had to kind of like stop myself too, and the wins were kind of keeping me in. But say if this was just a bad week and it was just like, say I took a whole bunch of losses, bro. This trying to perform in this type of with that type of mentality, you get this. But look how these trades, it was just straight. Okay, sometimes I took I take 2 losses and then boom, I stop for that day. And you see, when I took 1 loss right here, I was just like, fuck, I'm gonna just take that loss. It's not like I took 2 losses again. You know, I'll cut it back down to 1. You got to snap back in. You know what I'm saying? And then boom, snap back into 1 trade a day. Look, skipped out on Monday. 1 trade, 1 trade, 1 trade. Took a small loss on Friday. You know what I'm saying? But this week was draining. And then I got into this week, boom, took a loss, right? I took way more of a loss than I should have on this trade in this one right here. So I'm like, bro, I'm skipping on this week so I don't tilt. Because I don't have a tilt. So I don't have a tilt week. You know what I'm saying? And then boom, I locked back into 1 trade a day. Even though I took this loss on Monday, okay, boom, fine. What? How big was that loss? Basically, okay, I didn't even take that on the funded account. I was being smooth with the funded account. I waited until Tuesday where it was a high probability condition, 200. Boom, you know what I'm saying? 175, boom. Skipped out on Thursday, Friday, took 1 more trade, 116. You know what I'm saying? Got it back. You know what I'm saying? And then yeah, I took a small loss. Look, $54. This is Power Week. This is Power Week, y'all. You feel me? A little $54. A little $54. Cut that shit early. I got out early. You feel me? Like I started moving my stop. Okay, it wasn't expanding at the right time. I started moving my stop. Done. I'll take that small loss to the chin. I don't let that ego get my way. Like, fuck, I took that loss, man. Fuck, I need to make that shit back. $54? Like, you know what I'm saying? That ain't shit. And then boom, 200. You know what I'm saying? I got the video link in there. You know what I'm saying, of that video. But like, boom, 250. It's just like you gotta lock in and just focus on the process. You know what I mean? But yeah, and this was a way more high probable day throughout that whole week, especially with Powell. You know what I'm saying? With Powell news and all of that, I really didn't know. I wanted to be sure like this was gonna be high probable condition. Thursday was my high probable condition, and everything lined up. You feel me? So that's it. And so imagine if I would have tried to push it during these days. These 2 trades right here probably would have ate all of these losses up, but it's like, damn, I'm still at break even. That's how you go from break even to profitable, to that P&L curve straight growing. You know what I'm saying? Type shit. Because it's like it's your psychology too, with performing. It's your psychology too. High level, like people try to like be like, yo, psychology ain't this in trading. Psychology ain't that. You know what I'm saying? When trading is basically the same to high level performing, like in basketball and sports and shit. You know what I'm saying? That is that mental to be like a superstar like Jordan and shit. It's like mental. It's all that mental. You know what I mean? When you become a successful trader, a successful performer, playing through fucking like the crowd, everything against you. The crowd could be against you, but you still got that mama mentality. You know what I'm saying? You still got that mama mentality to where like you just a dog. You feel me? You gotta take that mentality of like, my results is a dog. My trading plan is a dog. You know what I'm saying? Now all I gotta do is keep that mentality while my trading plan performs. You know what I'm saying? That this shit is gonna work out. Your rules, everything is solid because nigga, you did the back testing, my nigga. So now you should have the confidence. Like, all I gotta do is make sure my plan, I just focus on my plan and let my plan perform. You feel me? Let the process perform of your trading strategy perform. You know what I'm saying? You just wait for that shit. And then you keep that mama mentality. Like, I'm not gonna let this market get to me if I do take a hit, if I do take a loss. Because in the plan, in your data, you take fucking losses. You know what I'm saying? So like, bro, you just can't, you gotta make sure you don't let this get to you. You know what I'm saying? Like, for real. Shit, dead ass, man. I'm telling y'all, bro, y'all got this shit. I know I got this shit. You know what I'm saying? I just gotta keep this right here poised, you know what I'm saying, under control. Not let ego get in the way of me taking a hit, because my plan, my process, my rules is always right. It's always right, bro. You know what I'm saying? I'm gonna always say that. It's always fucking right, because don't matter the outcome of what the market does and you take a hit, it's just part of the game. Kobe took losses, Jordan took losses, you know what I'm saying? But boom, what about his wins? Because he kept that mentality. Like, nigga, no matter what I go through, I'ma keep going, and I'm not keep going as in keep taking trades, my nigga. Don't you know what I'm saying? But I'm saying he stuck to his process that he worked on in the gym. You know what I'm saying? In the gym. by collecting data. You know what I'm saying? Because this is you getting the practice right here. And then you take this into the trading plan. And then the trading plan performs. Man, I'm telling y'all, hey man, you are this close to being a profitable trader. I'm telling you, you're not. If you're struggling right now, you're this close to being a profitable trader. I'm telling you, you just gotta do the reps in the gym. I'm telling you, because you improve. Bro. People who tell me, bro, like how you got a Stephen Curry with the jump shot. You feel me, bro? It's the best shooter of all time. Why? Because he constantly worked on the process of his jump shot. Because he's sticking to the process that he worked on in the gym, bro. That's what happens when you back test. You know what I'm saying? That's what you're doing. You're in that gym. I'm telling you. So people who be like on back testing, like, I don't know, I could just, it's not the same. I can stick to live market conditions and shit. Bro, I'm telling you, if you go through your plan and you back test your plan, I'm telling you, it's because you're getting the facts of it. The facts that shit is going to work. You know what I'm saying? But yeah, man, that's it. Goddamn, I just went motherfucking TED Talk, like TED. Bro, this video about to be long as shit. Goddamn. This a yap session now. Like, damn, I'm just talking and shit. I think I talk too much. I think I said the same shit over and over. I ain't gonna lie, I'm high as fuck. You know what I'm saying? You know what I'm saying? Good Friday, good Saturday. My girl was here, but she had went with my mom. You know, she with my mom and she with my sisters and shit. They having a little girly day. You know what I'm saying? So I'm here right now by myself, waiting for this Pacers and Bucks game. Cause you know what I'm saying? Hey, I got the Pacers, bro. I'm gonna act. You know what I'm saying? I'm from Indiana. What can I tell you? You know what I'm saying? But like, if we smacking the Bucks ass, I'm sorry, Bucks fans. Y'all niggas is done with. I don't care if Dame came back. I don't care about none of that shit. We getting into basketball now. But yeah, I'm out, bruh.